Thank you for joining us. David Hertel in for Elias. Well, one of the major news announcements this week was the decision from the Bank of Canada to cut its key interest rate for the first time in over 4 years. So now the rate has gone down from 5% to 4.75%. What does it mean? Is it all good news? Joining us to make sense of all of this is Mark Halpern, certified financial planner. He runs wealthinsurance.com. Mark, welcome back.
Thank you so much. It's great to be back again.
So I ran a bit long with Minister Fitzgibbon. We have a little short time. I apologize for that. But in terms of winners and losers, where do you think most people or business will stand with this announcement?
Well, I'll tell you, just a high-level stat that I think is quite fascinating is that 80% of all mortgages outstanding as of March 2022 are going to be coming up for renewal in 2024. Which
I'm one of those. I'm one of those.
Yeah. It represents $250 billion, and in 2025,
wow,
it's even more. It's going to be $350 billion. So most of us who bought more houses and had mortgages, some of them variable. Only 1 out of 5 people have a variable. But, we really pushed the envelope to be able to buy those homes, and it may have been based on, income that husband and wife had. And all of a sudden you're seeing rates, just to give you an idea, of somebody with a $300,000 mortgage could go from, the rate was at 2%, it's like $1,200 a month, and at 7%, it's over $2,000 a month. Where are they going to come up with that money? So obviously the government's trying to appease certainly Canadians and help them, because how are they going to be able to renew and really keep their homes? It's a pretty scary thought, even to go down by, the 25 basis points. It's not a huge uptick, but we're expecting another few, hopefully, decreases between now and the end of the year, which will hopefully make it easier for Canadians.
Yeah, this morning's unemployment numbers are relatively encouraging in the sense there's nothing in those numbers to indicate that the Bank of Canada will change its trajectory here.
Yeah, I'd say that, look, the big key here was inflation, right?
Yeah.
It's about fighting inflation. And they kind of feel that inflation will continue to move closer to their 2% target, which has increased over recent months. But, they're stressing this is going to be one meeting at a time. So I do see the rates are going to go down. They're going to have to go down. Otherwise, you're going to see a slew of foreclosures. Like, it's just not possible. People are stretched. There's more debt now in Canada than ever before. And therefore, people have to do some planning around that to make sure that they're covered no matter what happens.
It seems to be heading in the right direction. The European Central Bank cuts its interest rates this week for the first time since 2019. We'll wait on the Fed in the U.S., but at least a little breathing room. I read, Mark, that this decision by the Bank of Canada will impact the dollar, and that could hurt business. What do you think about that?
Yeah, absolutely. A lower interest rate compared to, let's say, the U.S. Federal Reserve might put downward pressure on the Canadian dollar, which potentially makes Canadian exports more competitive, but also makes imports more expensive. So that's an issue. I would say, look, at lowering costs is good. It will hopefully stimulate people to potentially who've been wanting to get into the market to buy a house. Maybe this will make it more affordable for them, or loans will be less expensive, or credit card debt, at least the carrying costs will. So that's very much encouraging. The key here is not to go crazy. You really do need to sit down with a professional to look at what your budget is, look at what your cash flow is, money in, money out, and figure out, where is the best place for me to invest my money? Is it paying down the debt on the mortgage? Is it putting money into an RSP or a TFSA? Is it, really it's sitting down and seeing the big picture. And I do think, though, that there are benefits certainly for us to see the rates going down. It definitely is going to give people relief.
So if I have been waiting to get into the market to buy a house, should I still be waiting, or should I start looking now?
Look, the question is where is real estate going?
Yeah.
We've seen it go up. In some places it's gone up by, doubled in the last 5 years. We saw it came down, came back up again. If you're living in the big metropolises, I don't see real estate going down considerably. There's immigration coming in, et cetera. Like, no, my kids are going to live in Toronto. I'm just saying,
Yeah.
like, it's just not affordable. It's just not affordable.
Mm-hmm.
But, they always say there's never a good time to get into the market. That's where you have to really make sure that you're not taking on more than you can chew. So really, it requires sitting down and looking at the planning. What can we afford? What's not going to strangle us? But I think, it's a great thing when you do have real estate. It can be a great asset as your equity goes up, and you have access to that equity in case of emergencies or opportunities using like a line of credit or whatever. And your home though it's not really an investment. It's a place to live, right? So that's the key. Yeah. But I think the people who are renewing mortgages now, there is some relief for them. They should look at maybe extending the amortization, right, when it comes up. Maybe make some prepayments. You're allowed to go ahead and include some lump sum payments of the principal because most of the money you're paying is interest. And then really, shop around, choose the right rate, the right contract type and term. And I think that's really the key is really doing the work and getting the wisdom and knowledge to make the right decision.
Mark, I appreciate your insights as always. Thank you for your time this morning.
Thanks so much, David. Appreciate it.
Mark Halpern, certified financial planner. He runs wealthinsurance.com.